As Jim Cramers often want to say, there's a bull market somewhere. Where?
Yeah, look, I think right now there are kind of two buckets of areas that we think are interesting. First, healthcare should be defensive. It's held up better than the overall market so far, and I would expect that to continue. In addition, with the recent elections, you see that the chances for broad healthcare reform are probably lower now than they were a month, 2 months ago. That's good. That's good for healthcare stocks, because it's been a big overhang for those stocks. It's good for United Healthcare.
Really, basically, you're saying this is code for Sanders and Medicare for All being taken off the table, or
lower probability.
Lower probability of, yes.
So that's one area, and I guess the other area that we're looking at is companies where there's some kind of specific catalyst for the company, which hopefully will provide some defense. So Verizon's chairman and CEO was on here just a few minutes ago talking about how they're pulling forward investment in 5G. Qualcomm's a beneficiary of that, right? They're all about IP for 5G. So things like that where you think, oh, there's some kind of specific catalyst that might help me perform a little bit better than the overall market.
Time to play defense or offense? I mean, these are defensive choices. Healthcare is widely regarded as defensive, though it can be a growth area too. Telecom.
Some of both. I mean, I think healthcare, to your point, healthcare can be really defensive. UNH is going to be kind of defensive. Qualcomm trades like a lot of semis, though, so kind of offensive.
You also have Disney on here, a company that you own. Go back just a couple of months. No one could find a bad thing to say about it. Now it's down, 30% from the highs?
Yeah. We still own it. I think that one, I want to see a little more of what the cost is of closing the theme parks, and to the filmed entertainment business. It's probably half of their EBITDA ex the over-the-top charges. So it's material. There are a lot of companies that are going to have whiffs over the next couple of quarters. A lot of companies, but it's pretty material.
How much more attention are you paying to corporate balance sheets today than you were 2 weeks ago, 4 weeks ago?
Yeah. Definitely more. Most large cap companies do have good balance sheets, so it's probably less of an issue for large cap companies. But certainly what we're thinking about with every company is, okay, what's 2020 look like? Can they survive? What happens if we have a recession? Then what does the balance sheet look like? I think you have to be asking those questions right now.
On recession, is it a question of if? Is it really a question of if?
Depends on your time frame. If over the next 5 years.
Oh, no, I'm talking about over the next 5 minutes.
Yeah, I mean, look, I think.
No, really, I cannot believe, having been out and around this week, the absence of human beings on the streets of Manhattan, in restaurants, in shopping areas.
On the roads.
I cannot imagine that we are not going to have negative GDP growth this quarter and next.
Definitely for a quarter, but I think you have to just take a step back and think about all the monetary stimulus we've seen and all the fiscal stimulus we're about to see. It's so fascinating to look back and think it was only a month and a half ago that we were looking at virus disruption as buying opportunity, right? And now we're looking at virus disruption plus energy price war equals major problem. But there's a lot of stimulus getting pumped into the market. So what we're trying to do is think about good businesses where you want to be invested long term, things with some kind of driver to them, like 5G, but then make sure that if we're wrong, we have the balance sheet.
Good common sense, Margaret. Thank you very much.